So I could potentially get some shorts from these levels here if we get an indication on the indicator to go short. I've changed things around a little bit, so the residual's still in pink. The green line is telling us whether the residual is statistically significant or not. So it's just acting as a filter, so you don't take every single extreme in the residual. So I'll show you what I'm reading. So the MIR is the micro impact residual, that's what we're plotting in pink. The z-score is the green line, and both have to pass through a filter for us to take a trade. So the residual line has to be bigger than 3, and then the z-score has to be at least it has to at least hit a minimum threshold, which is determined by the regime. So that's one of the new things I've added to the indicator. So we're not just taking any old residual spike now, just filtering out the best ones when we get into levels of liquidity that we can see on a bookmap current order book. Just because it looks a bit nicer on bookmap. I'm watching this as well on NinjaTrader, but it just looks horrible really. So on bookmap we just get a better visual. You can see when we're coming into these levels, and then if we smack into it and we get a red vertical line, that's telling us it's a higher probability short and it's statistically significant based on the filters. So if we want a short, we get a red line, which is telling us that the algorithm was making a prediction and price moved down more than what was predicted. If we get into a level and we're looking to short and we get a green line, you can still short, it just means it's going to be a weaker bounce. So that's just telling us the algorithm was already predicting price to move down based on the order flow and the delta, and it just didn't move down fast enough, if that makes sense. So you can still short with either a green or a red line. It's just telling us that the red line's going to be a stronger bounce and the green line's still going to bounce, but it will just be weaker. And the opposite is true for if we're looking to long. So if price is coming down into a level and we get a green line, green vertical line means the strong bounce is predicted there, because the algorithm was predicting that price was going to continue moving down and it didn't, which means its prediction was wrong. The residual got plotted as a positive residual and it was statistically significant, so that means we can long. So if we were coming down looking to long, coming into a level of liquidity on bookmap, and we get into it and we get a red line, that just means that the algorithm was predicting price to move up already based on the OFI and the delta, and it didn't move up fast enough. So we're still going to bounce, just it's not as strong of a bounce. So you can see we got into those levels, we got a big residual plotted, and you can see those, it was green and red there. So that means we can short, obviously you see how late that was. It actually got plotted here at 525, 540, which is there. Now just market ordered for the short, which is way too late. You can see if you're quick on the execution, you get a short-term move, which we can predict with a high probability. Um, yeah, so we can only predict a short-term move with high probability. So that one, it went from 40 to 25 in a few seconds. Obviously, we don't know if it's going to keep dropping, but you just need to be a bit faster on the execution. So we'll see if this one actually carries on going. If not, I'll wait for another one and try and be quicker with the execution. Eventually, I think I'm going to automate it. So as soon as you see something like this, it will enter short right there. So on the 10-second chart, it will be right in the wick. I'll show you what this looks like on the 1 minute. So it would have been right in that 1 minute wick. And we'll see if we can just take profit somewhere. But all we're doing is just quantifying the order book dynamic using C# or NinjaTrader, and just using the filter to take trades from. So this is updating on every event. So on my previous versions, I was using time-based events. So depending on your settings, you could. I used to use every 100 microseconds. It will update the trade signal. But now I use a different system which updates on every event. So instead of updating on a clock, it only updates when there's a significant movement in price and it reaches a threshold, and then it will update. So sometimes it's actually faster than every 100 microseconds, sometimes it's slower, just depends on the volatility. So it's always adapting based on the current volatility. So it's a slight improvement from what I had a few weeks ago. And this is all adjustable as well. So I've increased the residual threshold to 3 points, but you can have it lower or higher if you want. So if you have it higher, the pink line has to reach um, wider threshold before it triggers a trade signal. Um, I've just found that 3 is a good go between for the volatility, because you don't want it too low, otherwise you'll be having signals all the time. You don't want it too high because you won't get enough signals. 3 is a nice figure to use on NQ. Um, but if the volatility is really high around sort of market open and news, then you could increase this so you don't get any false signals. So you can see how it filters out all the trades, tell you when not to trade. Both of these have to pass the filter for a signal to trigger, but you don't need to watch this because this is just, it's updating. You see how fast it's updating every few microseconds. It's updating, but you can just watch this indicator until you get a line like that at a level of liquidity. So it's down to you to decide which ones you want to take. You can't just take anything. So if we get up to these levels for a short, we can short from there. You can see this on ES, some liquidity coming in above. That doesn't mean it's going to stay there, because it can always be pulled before we actually get there. But these are good levels to short from on both indices, because if we do get into a large level of liquidity on either NQ or ES and we can't get through it, we can look for a move to go short, and the entry signal just comes from the indicator. So we actually had another one here. So we are getting entry signals to go short here. My entry was just terrible with the market entry. That's fine.
Sorry, just had to grab something to eat. So let me just recap what happened. We had some liquidity on Bookmap up here. Where was it? Yeah, up at these levels. We get into it, you can see lots of volume. End auctions at the top. And I was expecting a bit of a drop. Look at this, loads of liquidity coming in above. So I was expecting a bit of a drop there afterwards, which is why I just held it. Excuse me. Which is why I held it for all that choppiness. If you look on ES, you had exactly the same thing, just above price. Loads of limits coming in to sell above price. So that's just telling us that price, people want to sell at these levels. There's traders willing to sell up here, which tells us the narrative that we're probably going to drop in the short term. You can see lots of orders being filled up here. End auctions at the top, so 0.77, 0.7 there. So we think both indices are going to drop from these levels. The short signal was at right up here in these wicks. My entry was a bit rubbish, but we got the short signal here from the impact residual and the filter, which is only letting us take the statistically significant trades. So when you get up to a level where you think we're going to short from, based on the order book and the liquidity that we can see there, all you do is just wait for a short signal from the indicator, and that's just quantifying the order book dynamic at this level, and it's telling us whether we should short from there or not. So I have loads of videos on my YouTube channel explaining how this works. I've made a few changes recently, but it still uses the exact same logic of the algorithm learning the impact of um, delta and order flow on price, and then plotting the residual in pink, which is the difference between the difference between the prediction and the actual movement in price. So if we get to a level and the algorithms learn that price should continue higher based on the specific order book dynamic, and we get there and it doesn't move higher, price actually moves lower than predicted, meaning we'll get a negative residual. That just means that that level is going to bounce, basically, and there was another one there and another one there. But you don't know how far it's going to go because we can only predict short-term moves with high probability. So you just, if you're a bit quicker than me, you can get a nice entry right at the top. And there's no need for candlesticks really. It's just you need good data, which is the level 2 data. If you want to, you can visualize everything on Bookmap, which I find is quite good. But again, you need the market by order level 2 data for this. And then you just need a data processing engine, which is running the square root Kalman filter. So the classic one was the RLS recursively squares algorithm using time-based events, but now I've updated it a little bit to use intrinsic time. So instead of updating every 100 microseconds, it only updates when there's significant movement in price. But it's still the same logic behind it. We're still using the machine learning algorithm to learn the impact of the order flow imbalance and delta on price, and then we're just plotting the difference between the prediction and what actually happens. And if there's a big difference in the prediction and the actual movement in price, then that signifies that we're going to bounce, basically. So you can just nail these little entries um, right at the edges of, right at the end of these turning points in price, and then you just have to manage it yourself afterwards. So I don't know how far this is going to go. All I know is when we got to that specific level, that we're going to bounce there. So this has nothing to do with price action trading. So there's no candlesticks involved in this. So you don't have to look back. You never have to look back at historical data. So you don't look to the left to see what candlesticks are there and then try and justify why we're bouncing here, because that is, I think that's a bit of a retail fallacy that you can use historical candlesticks to predict bounces in price. I think that shows a complete misunderstanding of market mechanics. Um, but that's a whole nother thing to go into. Essentially, all you need to do is quantify when you get to a level, are we going to bounce there or not? And the engine does it for you, but you also need to use your logic, which is why Bookmap helps. Um, just with the visuals, you can see where liquidity actually is, what happens when we get there. So as soon as we smack into a big level of liquidity, we're getting lots of volume, we're getting some end auctions or um, whatever order flow stuff you normally use, and then you just use this for your entry. So it just lets you know the exact turning point in price. So we don't know how far it's going, we just know we get to that level, we bounce. And that one went like 40 points, 40, 60 points, 70 points from there if you got the proper entry. So what I'll do, I'll just close this one and then I'll show you some other ones. So let me just stop this video here and I'll do some more short videos today, taking these little scalps, little 20-point scalps.